Hello and welcome to our daily market review and analysis. We haven't done a session for a few days as you will be aware that the market has been very unclear and therefore very little really to add. Also that it has been relatively congested. However, I think we are nearing a possible resolution of this congestion and possibly close to a turning point or where a new trend is likely to develop. So we intend to spend a fair bit of time looking through the dollar index and dollar related pairs, and maybe just quickly have a glance at a couple of other charts that we are currently interested in, although the trades that we've been looking for haven't quite developed yet. So we will start off with a quick look at the equity market. Now the equity market in the chart that we've been following is after the low we had here in November. It looks like we are moving in a 5 wave to the upside, and so far looking at first of all the RSI on a daily, this is the highest RSI, so it may well be that we've got a complete 5 wave movement in. So in fact my labelings need to be adjusted a little bit. Like so. Then this one here in fact will be wave 5. Now we are very close to that being finalized, or maybe already top has been established. So basically we have moved off in wave 1 in bracket, wave 2 in bracket, wave 3 in bracket, a very small retracement, wave 4 in bracket, and then we went up in a 5 wave to complete this wave 5 in bracket. That one should be here. Okay, so we moved off in a 5 wave up. So we've got here minor 1, minor 2, minor 3, minor 4, and then possibly minor 5 is now complete, or we might have a little bit left over, in which case I think this week we would probably make a top on the Dow Jones Industrial. Now often, as I've noted before, the market makes high or low of the week on a Friday or a Monday. So we're coming into Friday now. This week we have many important data released at a different geographical region. So for example, today later on we will be today, that is, this is Wednesday, so today we will be having Bank of Japan talking about their possible interest rate and quantitative easing, and then later on tomorrow, which is Thursday, we will have Bank of England coming out with their interest rate decision, which I think will broadly speaking remain where it is at the moment. However, it is the other element that the market will be focusing on, which is whether there will be any changes in the stance regarding the quantitative easing. And then soon after, or around about that time, we will also have the ECB releasing their interest rate decision, and then ECB press conference with the President Draghi later on. So those things will be quite significant events in which the market previously have often proved very volatile. And then later on we will have a non-farm payroll on a Friday in US, along with uh, the chairman, Mr. Bernanke, will be giving his a speech on Friday also. So I think this week is going to be very important. We've got 2 days with a lot of major news release coming in, and it's quite possible that we might spike into where the high should be on this equity index. But basically this week I'm expecting equity index possibly to form a top, because we do have a complete 5 wave nearly done, and we have corresponding RSI divergence. So for example, divergence from maximum momentum in a wave 3, retracement 4, and then wave 5, and within the wave 5 we also have this minor wave 3 with high momentum, and then wave 5 of that last 5 is now also showing a divergence. So I think that wave is also close to completion if it is not there, and should be probably by Friday form a top. So we could expect then a reasonable sell-off. Initially we have a rising trend line here, so we could come back into that. We also have the other trend line coming in around that region, and also the general rule that when the market corrects, often the retracement comes back to the vicinity of wave 4 of the last cycle. So this is the area we're talking about. So quite possibly we could get a retracement back towards 13,800 in the lower region, or maybe just about 14,000 or so, where we have this rising trendline support and the other one possibly lining up. So we could then expect maybe a week or two of possible decline in the equity market. So equity market will be looking to top and then be vulnerable for correction, certainly into next week. And then we look at the oil. Well, the oil has come into this short-term trend line and is not quite managed to go beyond that significantly, and therefore it is experiencing resistance there. We said previously that we might be able to actually label these up in the form that this here minor wave 1, 2, 3, 4 and 5, in which case we've got wave 1, wave 2, wave 3, retracement of 4 and possibly 5. So that is still possible. For that to happen, we need an oil to rise quite strongly just to complete that last cycle. If however it isn't playing that, and in fact in a larger scale, if it is playing a larger contracting triangle, then we would have wave A down in the bracket, wave B, wave C, and this here could well be wave D instead of this new cycle up. So if it's a wave D, then we expect it to fall down. So wave D, so we've already had a wave A as it were, ABC retracement for wave B, and we are now looking for a cycle down. So either we would have this 5 wave up, a small retracement and then rally up, or we would decline all the way back toward the rising trendline support for a larger contracting triangle. So either of those things are possible, and we still have no clear clue. But if the equity market is likely to sell off for a week or two, then it's quite possible that the oil could also sell off for that period. And then if that is the case, then if the oil and equity market both begin to sell off, then in a normal relationship we would expect dollar index to gain. Now recently we've been having difficulty with the dollar index and equity market in that they are not showing the usual relationship, and the usual relationship is where if the equity market goes up, then the dollar index normally comes down, and if the dollar index goes up, then equity markets come down. Recently, in fact, they have been both moving up together. So we should expect that to sort of untangle or be resolved, and my perception is that we are now at a very close to having that resolved. And if you look at this chart, I know it's messy, but generally speaking we have been following for quite some time the fact that this area here was ABC for a bracket, double bracket wave A, ABC for double bracket wave B, and so we are now in a wave C. And the rule generally says that if we get more than 78% retracement, like 80% retracement, which is what we did over here, then this is a flat. And in a flat wave, if we get ABC in wave A, ABC in wave B, then wave C would be 5 wave up. So we've been following that particular pattern, and in that 5 wave you can see how I have marked this, and it has been quite difficult actually to label them, and there is, because of that, a lot of confusion on the many instruments and on the part of traders in interpreting them. So here, for example, wave 1, wave 2, which I think we have reasonably accepted that. Then this next leg up is the wave 3, and the way it is made up is minor 1, minor 2, minor 3. That minor 3 will be over here. Then you get minor 3, then you get ABC for wave A, then B and C. So it's like a running flat. So wave 3, wave 4, and then we have a wave 5, and within that wave 5 it is like a very messy looking rising wedge. So that would give us a wave 3 in fact then. So we got a 5 minor waves, 1, 2, 3, 4 and 5. So that's wave 3 done, 1, 2 and 3. Then over here has been very, very complicated in a sense that we get lots of 3 3s. You got one ABC is a 3, ABC back up, ABC down, ABC up. So what are we playing at? So I have been changing the labels regarding where the wave 4 finishes, because clearly we are in some kind of a wave 4, but this is very, very unusual. See, normally I would have expected wave 4 to finish here and then wave 5 to top, but we didn't get 5 wave, we only had ABC up. So I think what we got is we got ABC down as a wave A, then we got this A, B and C as a wave B, so like an expanded flat, and then we are now seeing a 5 wave to the downside, which is like an expanding wedge. Normally you would see wave C to have like a falling wedge. So here we have a falling wedge, but it's an expanding wedge. So we've got A, B, C, D and E. Either E done, or we might have a little bit left over where it would complete. And if but if we're really not talking about a lot of movement, sometime later on this next few hours, I suspect that if the dollar index was to weaken a little bit, then certainly by open of London session tomorrow, we should see dollar index basically rallying to the upside, and maybe rest of the week it will probably continue making higher high and higher low in terms of the final leg 5. So that wave 5 is what I'm expecting now. Now how long that wave 5 actually takes, that's a little bit difficult to identify, but my feeling is that if you get a fairly sharp upburst of the momentum, then we could quite conceivably complete this between tomorrow and Friday. And if the Friday if the Friday, for example, the equity market tops and we find the dollar index also tops, then they're still continuing together. But if we find equity market begin to weaken and the dollar index begin to rally, then it's possible that we may have dollar index rallying into next week. So we may not have dollar index top yet, but it could be that it is close, and it's possible that if the dollar index continues to rally and we find equity market really starts selling off, then we have a disconnect, and the disconnect is the normal relationship, which is where if the dollar index rallying, then we expect the equity and oil to sell off. Now that could well be the case, because it might be that we've already got a top, and on a Friday we might actually finish up making the low of the week on the equity market. So equity market, I think, is more vulnerable to weakness, whereas the dollar index has a potential to run up. Now in order for this to happen, if you look at, for example, on this 4-hour bar, how many bars it took for wave 1? It took nearly 40 bars. So if we assume we start from here, then 40 bars brings us approximately there. So in other words, it could be that we might find that the dollar index actually tops out later on next week, probably 9th of April, maybe 10th, 11th of April, somewhere around. So maybe close to back end of next week, probably following week Friday. So this is on the understanding that I have these waves count clearly labeled. Now, to ascertain if that is correct or not, what I'm going to do is I'm going to take you to dollar index and euro index, or euro USD, meaning that if we have dollar index rallying, which is in this green and yellow is a dollar index, and you can see that so far we've got dollar index wave 1, dollar index we've just looked at is wave 1, wave 2, then running all the way up to is wave 3, and this here, as I was saying, is some kind of a wave 4. Then it didn't play out this rising wedge pattern that I was expecting before, and we just concluded that the wave 5 is yet to come. So I think this is what we're going to get is that this wave 4 has been a strange looking running flat. Basically that's all it is. Look, it is running flat in the sense that it is A, B and C, like that. So in that process we either have wave 4 complete, or we have wave 4 completing very soon. That's what we just concluded. Then after that we expect a rally to the upside to complete this wave 5. Now during that time, what we've got in the euro is the euro don't follow the same wave. For example, where this wave 1 finishes, euro bottoms out a little bit earlier, but it doesn't have clearly 5 wave. In other words, we don't have wave 1, wave 2, 3, 4 and 5. So I'm labeling that as a W in a sense that is A, B, C, so it's one zigzag W. Then from here we have wave 2 running up, wave 1, wave 2, wave 3 running up. So what the euro does is, and I will show you this on the other chart, what the euro does is apparently it's got wave A, wave B and wave C. Okay, so again it's like a running flat. So we get wave W, wave X. Then after that, see, because this was A, B, C, so because it's X, we need another A, B, C down. So we get wave A, wave B and wave C, and within the wave C we get this falling wedge. So we get wave 1, 2, 3, 4, 5. So that becomes wave Y. So we got W, X and Y. And then while this is forming wave 3, what we get again is some kind of Actually, this is not correct. Okay, so what I'm looking for here is this wave X there, and in the in between, what I think I've got is this kind of expanding. So this is expanding, and so this is the, so we got contracting here, falling wedge, wave C, so that become W, X and Y. Then I think I've got expanding, so we got A, B, C down as a B, wave C, A, B, C down as wave D, and then A, B, C up as wave E. So in other words, it's become, you know, like a triangular wave X. And so here we had A, B, C down, wave W, X, A, B, C, wave Y, wave X. So now we look for A, B and C. That's what I'm looking for. Okay, so A, B, C. So we've got wave A already done. Then I think wave B either is done or is close to being completed. Then we should expect a wave C to follow, somewhere like that. So we will finish up with this one here, wave B here, wave A here, and overall we'll finish up with somewhere in the region of 2680 to maybe 2650 on euro, by which time this one will finish with wave 5, and then this will start correcting in a big way, and the euro when will have put a bottom in by then, wherever that is. So for example, if we look at it here, yeah, so when the dollar starts coming down, euro will start going to the upside. Okay, now is this feasible? If it is, then whilst the euro do not confirm the exact swings and account on the dollar index, but broadly speaking, the dollar index has gone up to complete 5 wave, and we are coming down here in what appears to be triple zigzag, which is W, X, Y, X and Z. That's what we need a Z here, which will finish up with a triple zigzag. Okay, so is that reasonable? Let me show you why I think euro has a bit more downside left. What this is, you might have seen this chart before. What this is Spanish 35 index, so much like Dow Jones 30 index, the Spanish largest 35 companies, and you can see it has a fairly close correlation to euro. Sometimes we find the euro bottoms first or the index bottoms first, but then broadly speaking they move together in some way. So it's not 100% correlation, but they do have a fairly high degree of positive correlation. Okay, so here we find euro bottom first, which is back in July 2012. Then the index started running up, and then index had a secondary decline, whereas the euro continued higher. Then the euro had a larger sideways decline, and the equity index then caught up. Okay, so while the euro was going sideways, equity index topped out and it also went sideways, and then they both rose together and they topped out together. The euro topped out first and the equity index topped out a couple of days afterward. So since then, what equity index has done is it has dropped from there as a wave A, then it went up A, B, C to form a wave B, and is now coming back down in a wave C, and wave C normally has 5 waves. So you can see here you go wave 1, wave 2, wave 3 and is recently bounced for wave 4 and is currently trying to finish off wave 5. So my feeling is that wave 5 could be finished fairly soon, possibly in the next couple of days on the index. And if that was the case, then on the euro, if the euro is also to bottom out at the same time, so euro in fact didn't do A, B, C, but is gone in the triple zigzag formation. Okay, so if euro is to bottom out at the same time, then we may well have a bottom forming in the region of where we had here, for example. So this is an area where we had a high back in May last year, I think. We had a high, then we had low in November, and we're coming back into that low, and it is also approximately 61.8% retracement of the entire rise on euro from the low in July to high in February. And we look at that when we start looking at the euro chart. But basically, based on this Spanish index, which needs to do 5 waves down, so wave 3 is finished, wave 4 is finished, and is now on its way to complete wave 5. So if this wave 5 is to finish, then the euro should also finish at the same time. That means the euro only got a couple of days downside. So maybe euro can only decline Thursday and Friday, and it will probably bottom. But we said on the dollar index that it needs to go higher to form wave 5. Now, we could have a situation where on the dollar index we don't actually get a fully developed 5 waves up. We would get 5 waves, but they'll be fairly sharp. Now if that happened, then it might synchronize together, i.e. dollar topping out, euro bottoming, etc. But if we don't get that and we get a 5 full wave developing on here, then it's possible that what euro might do is this. Euro might bottom out later on next week, which means that the equity index, that is Spanish index, will probably bottom first and start making its way to the upside, whereas the euro will bottom later on. So we may have a euro making another dive and possibly continuing that for the rest of the week next week, or we might find that this week on Thursday it might bottom and then start rallying up, even though the dollar index don't complete its upside. But what dollar index might do is it might do like a truncated wave, and therefore it might not take too long, because it might do something like this, small little wedge, not going for the full target that we might normally expect it to do. So that's why I think this week we could be looking for this possibly topping and euro bottoming. Now that could all happen tomorrow and Thursday and Friday, by the way. Sorry, not tomorrow, Thursday and Friday. So this week, by end of this week, we could have a situation where the euro has bottomed, dollar has topped, and the Spanish 35 index has also bottomed, and then they start a new trend. Otherwise, we might find the euro continue to weaken for best part of next week, and the dollar index continue to rise. Because remember, we said about the equity index may be weakening for whole of the week. So if that's the case, then we may have a dollar rising for whole of the week, equity coming down for whole of week, and the euro also then coming down with whole of week, because normally euro also has positive high correlation to equity, not 100%, but high correlation to equity. So if equity declines, euro declines, and then the dollar index goes up, then that also makes sense. But we might just find that Spanish 35 index, which is close to forming a bottom, may bottom out first and start rising. So it's quite a mixed picture really, and that is why I think we don't see clear charts in any of these major currency pairs that clearly. So let me just quickly go over some of the US dollar pairs. So based on this, we're expecting a bit more weakness, at least on the euro. Now what I was going to show you is the US dollar pairs. On the US dollar pairs, if we look at US dollar Swissy, then you can see the US dollar Swissy might have had this wave A as like a B, C with rising wedge, wave A, wave B, and then we've had this WXYXZ to give us wave C, I thought. Or it might give you this ABC over here, possibly to complete one wave A. Then subsequently we are in a wave B down here, so that wave B could be that this is A, then you got A, B, wave A, then wave A, then we get wave B. So wave A, B, let's start again. Wave A of a larger degree, wave A or a smaller degree, then ABC to give us wave B. So essentially what we got is wave B this way. So A, then all of this here as part of B. So we get wave A, then smaller degree A, and even smaller degree A, B, and C. Then we get A, B, and C back up. So this wave B could be over here. So we've got wave A, this one is a B, and this one is a C. It's very strange, and I don't really like it in the way that this has appeared, but you can see we've got really in all of this is horizontal, but nothing more than ABC. See, this A is ABC, then you got ABC back up, ABC down, ABC up. You know, it's no 5 wave at all. It's all complex ABCs. I even thought that maybe if this was the B and this was C, that's probably bottom, and we should see another leg up, but we didn't see that. It never happened. So quite honestly, now what I'm looking for is that this here is wave B. So we got wave A, wave B, and we'll get another small leg, wave C, in the dollar Swissy, which would tie up with the dollar index, making another minor high and topping out, like we just discussed. Okay, so that's the dollar Swissy. And because of this sideway movement, this is wave A, this is the B, and we need a C. Even if it's not very big, we still need a wave C, and that would then finish this ABC retracement to the upside. Then in a similar way, if we look at US dollar, Aussie dollar, then Aussie dollar also what Aussie dollar has done is it looks to me that it's moved down in a 5 wave to the bottom. Then it should be coming out wave A, wave B, and wave C. So if this 5 wave down is A and this is B, we should be expecting another leg down for wave C. Okay, but equally what we need to keep in mind that this too has been playing some confusion in terms of being a triangle. And if this is the triangle, we probably have even triangle within a triangle. And what I mean is that we've got this first one down as wave A, ABC back as wave B, and then ABC down as wave C. So maybe we should have finished with A, B and C, and we should really be on the next leg up. Okay, so in which case we've got A, B, C as the wave A, then we've got A, B, A, B, C as the wave A, then we've got A, B and C as the wave B, and then final C. So in other words, we get wave A here, wave B, wave A. This is why it's confusing. So we got A, B, C to give us a wave A, then we got A, B and C to give us wave B. Okay, so we could have a situation where it looks like this being a complete wave A, and then from there to here could be wave B, and that becomes like a flat. So we got A, B and C. Okay, so that becomes a flat. So if this is wave A, this is wave B, then we should be really in a wave C, and this one should just continue higher. However, as it is also a part of a secondary triangle, what we might have is we have from here even wave A, then we got wave A of a lower degree, A, B, C up as a higher degree wave A, then wave A, B and C, and that C is A, B and C zigzag also. So we may come down to this kind of a triangle and then continuing higher from there. In which case the Aussie dollar is now close to topping out, and if you look at the RSI, is not really giving us much of a clue other than it is basically following the downtrend line at the top. Okay, it hasn't shown a new momentum to the high, so we are still within that congestion. So either we want Aussie dollar to come down back toward this rising trend line and form a proper triangle, in which case Aussie dollar is very, very vulnerable for quite a substantial decline. And when you look at the way it's gone up, it looks like it's gone up in a 5-way, but it's not really, because you see, if you look at this first one up, there's no 5 waves in them. It's A, B, C up, then this messy part is a wave B, and then we have this rising wedge. So then it looks like either a leading diagonal or an ending diagonal. So if this is leading diagonal, then we get larger wave A, larger wave B, then we get A, B and C, and in that wave C we got A, B and C as well. So we should be close to Aussie dollar topping out and at least coming back toward partial retracement, if not all the way down here. But if it begins to come down, that suggests that the Aussie will be weak and the US dollar will be strong, and which is what we are expecting on dollar index basis, although Aussie, New Zealand are not part of that. Then we look at the New Zealand. New Zealand also has gone up in what appears to be wave A, wave B, and we are now currently in wave C. And wave C could well be possibly like a rising wedge, and it's not quite ready, but I think it could be ready to top out soon. Okay, so both New Zealand and Aussie dollar have been rallying against the US dollar, but they are now reaching the limit where they could well begin to experience weakness. So we'll just keep that in mind. If we look at the dollar Canada, then dollar Canada, we think we had a wave A, ABC retracement wave B from the low here back in September. Then this part here needs to be 5 wave, because here we had a 5 wave. We had W, X, Y, X, Z, or 1, 2, 3, 4 and 5 as a rising wedge. So we need 5 waves. So we've got wave 1, wave 2, we've got wave 3 which has a 5 wave, 1, 2, 3, 4 and 5 wave 3, and this here is the retracement wave 4. We're coming to close to completion of that wave 4, and we should see another wave 5 to the upside. Now recently, if the oil which has been going up begins to now experience weakness, then that would mean Canadian dollar would weaken. So in that situation, Canadian dollar would weaken and the US dollar would gain against the Canadian dollar, will allow us to finish this final leg up. So that also suggests that we have quite a bit of upside left on the Canada against the US dollar before the Canadian dollar and US dollar tops out, and the dollar index will top out by then as also, I think, and will then begin to run to the downside. Okay. Likewise, if you look at the pound is in a little bit unusual situation, simply because previously it had a massive sell-off and it's come to the end of that sell-off and is now at least trying to retrace part of that sell-off or go into a new uptrend. So in that, I think we have an early sign of this one here as the possible 5 wave up, like wave 1, wave 2, wave 3, wave 4 and wave 5. Then we had wave A down, B and C, and if you just look at this here, we had this one is ABC, wave A is ABC. In other words, this sharp A, B and C is ABC zigzag. Then you see this wave B is also ABC zigzag, in that this is wave A, wave B and wave C, and wave C here, as you see, is like an ending flat or ending diagonal. So that's a zigzag. So in which case, if wave A is ABC zigzag, wave B is ABC zigzag, then wave C must have 5 waves. Okay, now in that case we can see here on this hourly chart we've got wave 1, wave 2 and then we have wave 3, and wave 3 also have 5 waves. We go 1, 2, 3, 4 and 5. Okay, so we got 5 waves clear. We go larger 1, 2, 3, 4 and 5. So if that is finished, we should really be in a new uptrend. So even if the dollar continues to strengthen, I think what we might have here is we've probably got 5 wave up, like 1, 2, 3, 4 and 5. We are now retracing in A, like so, A, possibly B, then C, and then it will start rallying up. So we might get a bit more sideways play on the pound dollar whilst the dollar index continue to finalize its final up leg, and then the dollar index will begin to weaken and then the pound will start making a run to the upside. But I think the pound is in a new uptrend, and soon we will have a situation where we've got potentially a head here, left shoulder, a head and the right shoulder with a neckline in that area, with a view of that breaking to the upside. And I think it will probably be quite a surprise, because I think majority are not expecting the pound to run to the upside, and that's of course dependent on dollar index topping out like we suggested. Okay, and then finally to look at the euro. So this is the euro, and like I suggested, that we've got this W, X, Y, X, and we are forming a Z, and in that formation of a Z we need ABC movement. So we got 1, 2, 3, 4 and 5 here to give us possibly wave A, and then we have A, B and C as the wave B. So we can change that to B, and we are now looking for leg to the downside to form a wave C. And in that formation, this leg down looks very choppy, but it might be a 5 wave down. If you look at it on smaller time scale like 15-minute chart, you can see that maybe we've got wave 1 down, wave 2 up, and then we got wave 1 down, wave 2 up, then we got wave 3, A, B and C, as a wave 4, and then we got 5 wave down to complete that A, B, C, D to the downside, in which case we have wave A, B and C possibly completing the retracement of that, and we are now in a second leg down where we have wave 1 down, currently 2, and we should see speed building up, and that would coincide with the dollar index making its final move to the upside. So I am expecting a further weakness on the euro, and in terms of the minimum we are expecting is I have this trend line which you can see where I have drawn from. Nothing much over here, but really speaking is connecting basically this spike high here, this one, and the bottom comes into that, and then if you copy paste the same line, then you can see on the top we have this high of January or February 2012 and a high of the February 2013, and it's the same line at the bottom, and so that's what I'm looking for, a bottom forming in that area. Okay, and it is also approximately 61.8% retracement coming into that region as well. If you did a 61.8% retracement, see if you do 61.8% retracement coming in exactly where that actually is there, that this green line here is where it is. Let me just take out 50% line to make it easier. Okay, so 61.8% retracement, which is also the low of November, and you can see on the other side it is the low we had back over here in January 2012. So in that vicinity we should be looking for a bottom. So this is the area we're looking for, anywhere from here, which is 126.80. well, really from where it is, I think 126.80 is an approximate area we are looking for euro to bottom out, and we would finish up with this as a triple zigzag, and that would also coincide with the correlation chart we had on the euro and Spanish 35 index. So all the US dollar pairs seem to be suggesting that quite possibly the dollar index should be gaining, and we should have a weakness on all other US dollar pairs. And in terms of the upside target, see, we have already gone up to the 78% retracement. If we go up to 88% retracement, that brings us to somewhere in the region of 83.50. So that's where I'm looking for, 83.50 as a possible area for a top to form for the dollar index. So that being the case, we should see a major trend change take place fairly soon with some of the currency pairs, maybe like a euro by Friday, I think, as this week is a big heavy hitting news, and also many of these major turning points have taken place after some of those significant news events. For example, you'll remember that this run-up was the Bernanke's speech, and then likewise we had this high was the President Draghi speaking as that top was formed last month. And then similarly, when you go back, you'll remember that this sell-off here from February 2012, that was also as a result of non-farm payroll. So we got all of those. We got non-farm payroll, we've got trade deficit figure, we got ECB and UK rate decision, all of those things happening together. And just to cast our eye back, once we complete this, we've been saying previously that we would have two possible outcomes, that is A, B and C. Then we were saying previously we were saying that this was a W, X, Y, X, Z, but that is now being dismissed because this retracements come down too far. If it finished over here somewhere, then we could have had that as an X, Z. So we got W, X, Y, X, Z, triple zigzag. But now it's come down so far, almost back toward here as a double bottom maybe. So I think this is the one that's going to be more in play. In other words, we got A, B, C, retracement all the way down here as a wave X, and then we get A, B, C again to the upside. So we'll wait for that until we get a confirmation of the bottom, but the bottom I think is close, and we should be looking for euro to bottom out. So with that in mind, there are a couple of pairs I just want to quickly look through, and then we will conclude our review for today. On the pound pair, we have been trying to find a potential long trade on the pound CAD, and you can see that this one is not completely ideal, but I'm still thinking it's some kind of a wave A or something up, but somehow these are very strong down wave movement. So maybe this was just a retracement and it's coming down, and what I'm expecting here now is possibly to give us some kind of a falling wedge formation, maybe something like that. And what that would do is a dollar Canada would probably make like a run up, pound Canada will run up, then come down to form, and that would give you 1, 2, 3, 4 and 5 as an ending diagonal, with a view of possibly then giving us a long entry. Okay, so still to keep it under observation, but it's not quite ready. However, if you look at the New Zealand, I think that is almost ready, if not really ready. I think it's very, very close. And not sure whether we will also get the same thing happening with this one, i.e. like that, and then possibly like a falling wedge, but that is a possibility, like so. But it is very, very close. It's just taken out the last low, so anybody who had a stop just below that, that's been taken out. On the RSI, we still have a divergence on 4 hour as well as on daily, so we still looking for a potential long entry, and we have broken out of this declining trend channel, this one, and we're just outside, so we're just looking for a bottom. So that bottom could well be that either we already have a bottom, look at it hourly here, see, either we already have a bottom, and in which case we will wait for a pullback. Once we get 1, 2, 3, 4 and 5 up, we'll be able to put our Fibonacci on and then wait for a pullback and look for an entry like that. Or if this also gives us a falling wedge pattern, then we may be able to get potentially a long entry almost close to the low, because this will be like A, B, C, D, E, and then we would have run to the upside. So the long trade on pound New Zealand, I think, is very close, and it's possible that, like pound Canada, we might also see a potential falling wedge developing here over the next couple of days, and we will probably have a long trade to consider. Same with the pound Aussie. The pound Aussie, I think, has already bottomed. That definitely seemed to have this wave 1 done. Then we had wave A here, ABC is wave A, ABC wave B, and then we've had a wave C down, which you can see is also 5 waves. 1, 2, 3, 4, and 5. So now we've started to go up, and I think we've got wave 1 up, wave 2 down, wave 3 up, 4 and 5. So maybe we'll get like that, and then we'll have an ABC retracement back down, and we should really be looking for an entry as close as possible to the low, but probably somewhere in the region of 144.50 area. Okay, so not to rush in, but I think it's very, very close, and all 3 trades will probably line up on the pound. As far as the euro is concerned, I think they are also going to line up, but euro might take a little bit longer. Wrong one. Euro will probably also line up. However, you can see on there the euro New Zealand is good, because we had this little triangle. So wave A, wave B, and wave C, and the triangle is finished. I think. So we've got this 1, 2, 3, 4, and 5 with the divergence. So this one, I think, is also ready. And in terms of the stop loss, any trade on here, stop loss just below the last low. So we're still looking for 100 pip, possibly, if you enter right now, or if you put this minor trend line on, then really you want that trend line which has 3 contracts, 4 contracts altogether. We need that to break, and I think we are close to stoking a long entry on Euro New Zealand. And we noted that the New Zealand and Aussie are vulnerable to being weak, because they have been rallying against the dollar recently. So that would also confirm the fact that we should see, if the euro doesn't weaken as much as New Zealand and Aussie, then we should see that this one start running to the upside. And same again with the Euro Aussie has come in from the double bottom, and you can see it is now really take all this out. Okay, as you can see, it's broken through the downtrend line, and we have divergence, and it's just now the price action to confirm our entry. And you can see on here that, if you were to say, for example, have a price take out this last pivot high, then you might have 150 pip initially stop loss, but that would be the approximate area to get long in, around 123.50 area. Or you get, on a smaller time scale, if you get a drop back to partial retracement, something like that. So in which case you'll be looking to enter closer to 122.50. Then your stop loss will be relatively small. Okay, so those trades are still potentially long. It's taken time, and some of the trend lasted long than we were expecting, but my feeling is now we should get some of those good trades lining up soon. This week, next week, we could begin to maybe start building a small position, and then gradually adding to that as we see price moving in the direction that we anticipate. So that's all I will do now. Tomorrow we will go through some yen and Canadian pairs. So I hope you'll be able to join me then. And in the meantime, I will post this one out as usual. Do let me know if there's any comment or questions or things not clear. Then I will try and clarify that tomorrow in the next session. But the main thing really to take home is that we've been moving sideways in what appears to be this very crazy kind of wave 4, and we still have one more thrust up, and it's possible for that final leg either to complete this week with these major heavy hitting economic news announcements due tomorrow and Friday. Okay, so I'll stop the recording here, and I hope this helps you in carrying out your analysis and planning your trades. Thank you.